The market is a device for transferring money from the impatient to the patient. This iconic quote from Warren Buffett encapsulates a fundamental truth about investing. The financial market is not a game of speed, but of endurance and discipline. But how can this philosophy be applied in a scenario full of uncertainties? Inflation continues to pressure global economies, interest rates are at high levels, and volatility seems to be on the rise. Amid all this, Buffett stands out for his conservative stance and his insistence on solid fundamentals. He prefers to navigate turbulent waters by accumulating cash and selectively investing in genuinely attractive opportunities. If you're wondering what might happen in the financial market in the coming months or years, the answer, according to Buffett, does not lie in guessing short-term movements, but in understanding eternal principles: patience, long-term vision, and discipline. This guide will help you understand how to apply these ideas to the current scenario, offering practical lessons for those who wish to thrive even in times of uncertainty. The central point we will explore is simple but powerful: the mindset and strategies that helped Buffett build his fortune not only survive crises, but flourish in challenging times. And you can learn to do this too. What will be covered in this guide? We will dive into the long-term mindset, explore why Buffett avoids short-term predictions, and how he identifies opportunities even in seemingly expensive markets. Additionally, we will look at practical examples of his philosophy in action and how it can shape your investment approach. Now that you have an idea of what's to come, let's deepen these lessons and translate them into practical actions. After all, understanding the financial market is less about predicting and more about preparing. If there is something Warren Buffett has always emphasized in his decades of success in the financial market, it is the importance of investing in solid businesses and avoiding speculation. For him, the stock market is not a casino, but a tool to acquire shares of companies with great long-term growth potential. An essential lesson that Buffett often repeats is, don't try to predict the market. He himself admits that he doesn't know what will happen next quarter or next year. However, he knows that good companies will continue to grow and deliver value to shareholders in the long run. An interesting story to illustrate this is Buffett's investment in American Express in the 1960s. At the time, the company was facing a financial scandal that caused its stock to plummet. Buffett saw the underlying potential. The brand was strong, customers trusted it, and the problem was temporary. He bought shares at a very low price and held them for decades, resulting in one of the most profitable investments of his career. One of Buffett's most inspiring quotes is, "You don't need to be a genius to invest well. What you need is the temperament to control the urges that lead other people to make mistakes." This means that anyone can invest successfully as long as they stay calm and follow solid principles. Imagine, for example, that the stock market drops 20%. While many panic and sell, the investor with Buffett's mindset sees this as a sale on great companies and takes the opportunity to buy more shares. This patience is what separates amateur investors from successful ones. Buffett often says, "The market is like a rubber band. In the short term, it is driven by emotion, but in the long term, it is driven by fundamentals." This means that true returns in the financial market come to those who know how to wait. A striking example of patience is Buffett's investment in Coca-Cola. He bought shares of the company in 1988 after the '87 crash. At the time, many thought the market was too risky. Buffett, however, saw Coca-Cola as a strong global brand with the potential to grow for decades. He held the shares for more than 30 years, and today, the annual dividends he receives exceed the amount he originally paid for the shares. For investors, the lesson is clear. Do not be swayed by short-term market movements. Instead, ask yourself, will this company be stronger in 10, 20, or 30 years? This perspective will help you ignore daily fluctuations and focus on what truly matters. Buffett has a famous saying, "Be greedy when others are fearful, and fearful when others are greedy." He believes that market crises are unique opportunities to buy valuable assets at low prices. A recent example occurred during the 2008 financial crisis. While many investors were panic selling their stocks, Buffett seized the opportunity to invest in solid companies like Goldman Sachs and General Electric under extremely favorable conditions. These decisions earned Berkshire Hathaway billions when the market recovered. How to evaluate undervalued stocks. Buffett uses a simple but powerful concept to evaluate stocks: intrinsic value. In his words, price is what you pay, value is what you get. He looks for companies whose intrinsic value, that is, their real value based on future earnings, is higher than the market price. Here is a simplified process for evaluating undervalued stocks. Analyze financial history. Review how the company has performed over the past 10 years. Consistent and profitable businesses have a higher chance of success. Consider growth potential. Ask yourself, can this company continue to grow? What factors sustain its growth? Compare price and value. If a company is trading below its intrinsic value, it may be a good investment opportunity. A practical example is Buffett's investment in Burlington Northern Santa Fe, BNSF, a railroad company. Although the sector wasn't glamorous, Buffett recognized that rail transport was essential to the American economy and offered predictable returns. He bought the entire company in 2009 for $34 billion, a move that continues to yield significant profits. Buffett is known for his consistency. He doesn't change his strategy, whether the market is rising or falling. This discipline is an important differentiator for any investor. An interesting analogy Buffett uses is the comparison between investing and baseball. The key is not to swing at every pitch, but to wait for the perfect one. In other words, you don't need to buy stocks every day. You just need to wait for the right opportunities and act when they arise. With these strategies, you will be better prepared to face any scenario in the financial market, always with the long-term mindset and discipline that Buffett advocates. Warren Buffett's philosophy is a powerful reminder that success in the financial market is not about predicting the future, but about preparing for it. What we've learned here is not just an investment lesson, but a life approach based on patience, discipline, and focus on fundamentals. Now that you understand how Buffett's approach works, here are some practical actions you can implement immediately. Study before investing. Choose one or two companies you know well and start analyzing their financial fundamentals. Create an opportunity fund. Set aside part of your capital to take advantage of crisis moments, just as Buffett does with his cash reserve. Define your long-term goals. Ask yourself, where do I want to be financially in 10, 20, or 30 years? Use these answers to guide your decisions. Practice patience. Commit to holding your investments even during market fluctuations, as long as the company's fundamentals remain solid. The investment journey is much like planting a tree. You need to choose the seeds carefully, water them regularly, and wait the necessary time for them to grow. Just as a tree grows slowly, but bears fruit for years, well-made investments can ensure your financial security in the future. As Buffett likes to say, someone is sitting in the shade today because someone planted a tree a long time ago. The best time to start was yesterday, but the second best time is now. If these lessons have inspired you and added value to your way of thinking about investments, don't forget to like this video and subscribe to the channel. Here, we explore not only the financial market, but also the philosophies that can transform your life. Join us and keep learning from the strategies of the greatest investors in history. See you in the next video, and remember, Investing wisely today is the path to reaping the rewards tomorrow. Until then,